I'm Ed Altoff. I'm with Loesel-Schaaf Insurance Agency. Loesel-Schaaf was established in 1926. I've been with the agency for the past 30 years. I've been in the insurance business for 40, but the last 10 years I've been specializing in long-term care planning. I've put together a team of people, two living in Pittsburgh, two of us that have ties to Pittsburgh that are servicing the Pittsburgh marketplace. Mike Osilka is a long-term care specialist. Dr. Joel Waldman is a disabled dentist. He also works for the Pennsylvania Dental Society, advising their members, and Penn State University, advising their employees. Kendra White lives in Pittsburgh. Kendra has dual masters in caregiving and gerontology. But let me tell you a little bit about my experience and my ties to Pittsburgh. A little over 10 years ago, we got a call out of the blue, and my wife and I became caregivers from that point on. For the next 10 years, we were actively involved in the caregiving of her parents, who lived in Pittsburgh, West Mifflin to be precise. This took us by surprise. What ended up shortly thereafter happening is we started on a journey of being in Pittsburgh one workday a week for the next 7 years. We needed to be in Pittsburgh, having picked up my mother-in-law in Munhall, and be at Jefferson Hospital by 7 to 10 after 7 once a week. You can just tell with the thinking, one day a week causes some, not only anxiety, but there was some financial. And that's primarily what we're going to discuss, is the financial, emotional, and physical needs of the caregiver. Like I said, we did this for the next 7 years. We were glad to do it. But in the process, some of the retirement planning that I had done took second string. We had planned on, my kids are both teachers. My son teaches in McKeesport. He, at this point, was starting to have grandchildren. We missed a lot of the grandchildren growing up, but we were spending the one day at the hospital. Yeah, the retirement planning that we had done up to that time had us, once the kids had graduated from college, once the expenses of helping the kids get on their feet was over, then we would start increasing my contributions to my retirement plan. What ended up happening is the kids graduated from college. Thankfully, they got married shortly thereafter. Then the call came from the in-laws. For the next 7 years, we were not in a position to increase the retirement savings. Fortunately, I feel fortunate in that I love what I'm doing, and I didn't have an exact retirement date in mind. So as long as things are going good, I'll continue to do this. My wife, on the other hand, she was able to keep her job for about a year, and then we decided that she would retire, that her day-to-day activities with them, even though it was at a distance, was too much to do and work. So that took a hit on the retirement planning. So this is just to give you an idea of some of the caregiving stuff that takes place, and then we're going to start the presentation. Thank you for your time.
Now we're going to go through our long-term care education and planning program. The 4 stages of planning that we're going to go through are education, discussion of the issues, decision-making, and implementation. We're going to cover all the misconceptions associated with chronic care, the value of early comprehensive long-term care planning, and the transfer of risk. Question: what is the first thing that comes to mind when you hear chronic or long-term care? Long-term care is not a place, it's an event. So it's not a nursing home, it's not an assisted living facility, it is not a facility whatsoever. It's an event. It's an event that can happen at any time and at any age. Chronic long-term care is being disabled, chronically ill, or cognitively impaired, requiring assistance with 2 of 6 activities of daily living. It's always 2 and it's always 6. It's always the same 6. And they are bathing, continence, dressing, eating, toileting, and transferring. Transferring, getting in and out of bed, getting in and out of a chair, hands-on or supervisory. Hands-on, physically you're not able to do it. Supervisory, there may be a cognitive impairment. Expected to last 90 days or longer, certified by your primary care physician. This slide to me is the most important. Why we need to plan for chronic care. It offers your loved ones the opportunity to supervise your care rather than reorient their lives and provide your care. I would not want my daughter or son who might live next door to me providing the care. Supervising the care, absolutely. I would want a loved one supervising the care. But providing the care, and we'll get into this, is a whole nother thing. It allows them to maintain the relationship with you as a spouse, children, or friends versus the role of a caregiver. Caregiving has numerous emotional and financial consequences. This helps preserve their emotional and physical well-being. Over 50% of the families that have a loved one that goes into care disintegrate the relationships. So that's why we're trying to get this information out. Misconceptions is it won't happen to me. There's nobody today in a skilled facility that ever thought when they were in their early years that that would be their last place. Nobody thinks it's going to happen to them. A lot of people believe that they must be already covered. We'll go through that misconception. My family will take care of me. We'll walk through that. I have enough money to pay for my care. That's fairly unlikely. And that long-term care insurance is too expensive. It won't happen to me. 70% of all Americans 65 or older are going to need long-term care at some point. 1/3 of stroke victims are under the age of 65, and you're seeing someone in the U.S. having a stroke every 53 seconds. 43% of the people that are in care now are under the age of 65. That's pretty much been my experience also. I've had 14 people in claim, and all of them have been under the age of 60. 18% of the 79 million baby boomers are expected to have some type of cognitive issue, and 10,000 baby boomers turn 65 every day. I'm already covered. Well, long-term care is not covered by health insurance. Granted, if I were to have a stroke today, I'm covered by my employer's health insurance coverage. I pay a pretty penny. My employer pays a pretty large amount on this. And it covers medically necessary items. So getting me to the point that I'm stabilized, health insurance will pay for. But the minute I go into a custodial situation where I'm just not getting better, there isn't really anything more they can do medically. At that point, health insurance backs off. It doesn't matter what carrier it is, you go to your own assets. Granted, this is not very likely to happen, but it happens every day. Disability income insurance. Disability income insurance is designed to replace income lost. So it's designed to pay your bills, your rent, your mortgage, your groceries, car loans, those type of things. Government programs, when you get your Social Security statement, it's very clear in bold print that Social Security is not there to cover long-term care or extended care. Medicare has an excellent, very limited benefit. Very limited. It's a rehabilitative benefit. Rehabilitative meaning that I need to be coming out of a hospital, having spent 3 days as an admitted patient, and I need to be rehabilitated, physical, speech therapy, planning on going back to wherever I was previously, whether that might be my own home, an apartment with one of my children, wherever I was previously. The rehabilitative benefit is designed to get me out of a nursing home back into my normal setting. In that case, Medicare pays the first 20 days at 100%, day 21 to 100 at between 75 and 80%. Medicaid covers all of your long-term care expenses after you have gone through all of your assets. Medicaid does not pay anything towards home health care or assisted care, but does pay skilled nursing care, but after you've gone through all of your assets. Medicare supplements are not designed to pay for long-term care issues. My family will take care of me. We all say that at some point in our life, that's what we're here to do, is to take care of our parents. That's part of the job. We say that without realizing what that actually means. And this is just giving you some of the national statistics that are coming out. This is becoming a bigger and bigger issue. 66% have had to make adjustments to their work life. As I explained, I was in Pittsburgh 1 day a week for 7.5 years, from reporting late to work to giving up work entirely. 20% of caregivers cut back work hours to part-time. 48% of caregivers report losing a job, changing shifts, and or missing career opportunities. 80% of caregivers report contributing financially for care. This was a situation that I was involved in. Not only was I contributing financially for care, it meant that I was not able to do what I had planned to do to boost my retirement income. So that all was put on about a 6-year delay as I started contributing financially. Luckily, I'm healthy and able to work extra a number of additional years, and I probably would have done that anyway as long as I'm healthy, but it was definitely a financial burden. And you can see 80% contribute. 22% of caregivers take a leave of absence. The chart below is just showing you what 24/7 looks like. And I know a lot of people that are being taken care of by family members, and they're there every night. Somebody's there all day. It's very, very difficult to do that. I have enough money to pay for care myself. That well may be, but just to put you in touch with what some of the current prices is, and this is a little bit outdated because the statistics that come out of the state of Pennsylvania are always a year or two behind. But as you can see, in-home care, anywhere from $24 an hour up. Assisted living is looking at about $40,000 a year. And a skilled nursing or rehab, you're looking at somewhere over $92,000 a year. Pittsburgh, Allegheny County, and surrounding areas is more expensive than this across the board. This is a Pennsylvania average, so it takes in all of the rural areas in Pennsylvania. Allegheny County, Erie County, our rates are much more expensive than these. What is the first step in planning? Having the courage, and it's difficult, to have a candid conversation with your spouse and family, be that parents or children, and ask, what is our plan to protect our most important asset, our family? We've got insurance to cover most everything that might happen. We've got our retirement plans built in place, but this is that unexpected thing that could happen at any time. You're planning thoughts and wishes, things to be talking about. Who will care for me? How will my needs be met? What if both me and my spouse need care? Where will care be provided? How will our life change? Maintaining normalcy in your family, staying at home, freedom from financial burdens. not being a burden to your family. Nobody sets out to plan on being a burden to their family. It just happens. Planning with insurance. It's the logical continuation of risk. People every day purchase life insurance planning to protect their family in case of an unexpected loss of life. Purchasing long-term care insurance to protect your loved ones is while you're still alive. Long-term care insurance offers your loved ones the opportunity to be supervising the care rather than reorienting their lives and providing your care. Long-term care insurance allows them to maintain their relationships with you as spouse, children, or friends versus the role of caregiving. Helps to preserve their emotional and physical well-being. This chart's just kind of showing you the homeowner's claim, which is the first chart upper left. The chance of having a homeowner's claim is 1 in 1,200. Next one, automobile claim, 1 in 1,200. Large medical claim, 105 in 1,200. But the chance of having a long-term care event is 720 in 1,200. So this is just visually showing you the difference. Although we protect for all those other and should, this is the one we may not protect, and this is the likelihood of that happening. Planning with long-term care insurance provides a dedicated stream of income coming in to provide for care, whether that's home care, a facility, assisted living, skilled nursing care, adult day care, whatever it might be, it's providing a dedicated stream of income to pay for your care. Helps to minimize financial, emotional, and physical impact on your family. Helps protect income, assets, and financial future. Access to quality care, because absolutely what you have in the way of assets determines what your options are at the time that you need care. Helps preserve your independence, helps keep you at home longer, allows your investment portfolio to execute for the purpose intended, helps to minimize or eliminate taxes, and helps you pass assets to the surviving spouse. More importantly, it helps you enjoy peace of mind knowing your most important asset is protected. We represent all of the major carriers and most all of the carriers. In this particular situation, we're going to talk about Life Secure. Life Secure is owned by Blue Cross of Michigan. It's a wholly owned subsidiary. But at some point, we may be suggesting to some employee that we use another carrier for their specific purpose. So that may happen. We represent them all. So that's one of the benefits that I believe we were chosen for, is the ability to be independent. Issue ages are 18 to 79. It's available to employees, spouses, family members, meaning siblings, parents, children. The variables that determine the monthly premium are the total benefit pool that you would pick and the monthly benefit that you would draw from that benefit pool. So we'll see more of that as we get into a quoting position, but those are three variables. The benefit would start after a 90-day calendar day elimination period. There's ability to have a guaranteed future purchase option, giving you options in the future to purchase additional coverage. There's a flexible benefit feature that gives you the ability to pay family members and such. Waiver of premium when in claim. So once I go into claim, I no longer pay my benefits. When I'm in claim or preparing to go into claim, Life Secure has care advisor services throughout the U.S. to help negotiate, help talk you through the different providers. A lot of optional riders. In most cases, and we'll talk about this in just the next slide, someone will be picking up a 3 or 5% compound inflation rider. That is to adjust that monthly benefit in that total benefit pool as we go, so that 20 years from now, if I picked a benefit pool of 100,000, it might be worth 240,000. A shared care rider, meaning that I can share care with my spouse's policy, so that if I use up all of my policy, I'm able to take some of my wife's policy, a money back promise, and a non-forfeiture benefit. This is a critical slide. Life Secure's coverage qualifies under the Pennsylvania Partnership. Pennsylvania Partnership is people that have purchased a qualified policy, which this would be, are able to protect a portion of their assets that they might otherwise have to spend down in order to qualify for Medicaid. So this protects some of my assets from that spending down. The asset protection is provided on a dollar-for-dollar basis. And as an example, a consumer who purchases a Life Secure policy with a benefit payout of $200,000 can protect $200,000 in personal assets above and beyond the assets he or she is allowed to keep under Medicaid eligibility requirements. So this becomes a major piece of legislation. The partnership is Medicaid, which is federal and state money, Life Secure, and then you become part of the partnership. There are some requirements that are put on by Medicaid, being the state and the federal government. To qualify, you must be under the age of 75, must purchase a plan that includes either a 3 or a 5% compound inflation protection option. Over 76, that's not required. But under 75, it doesn't matter, but you need to have that increasing by either 3 or a 5% inflation. This you'll see more when you go into the quoting process. For a one-time only, lifetime, one-time only, I can't say that enough. This was a one-time, 90-day period that for one time there's a simplified underwriting program offered to people ages 18 to 65 employees. It's available to full-time employees and their actively at work spouses. Actively at work is someone aged 18 to 65 who is a W-2 employee currently employed outside the home, regularly scheduled to work at least 20 hours per week. So this would be you as an employee working over 20 and a spouse working over 20 hours, then answering no to 6 health questions and being within Life Secure's height weight parameters, you are guaranteed to have the coverage. They do check and do a prescription screen through a national database. Questions about prescriptions and details on current medical conditions are not asked other than what's asked in those 6 questions. And like I said, this is strictly limited to that 90-day initial enrollment period. It will not be offered again throughout your employment. This is a one-time only. All the time, you're able to go through the full underwriting. So if for some reason you don't meet the 90 days, you have to answer yes to one of these questions, you still may be eligible under a full underwriting process that just involves buying doctor records and such. Long-term care insurance is too expensive. This is kind of giving you what the premium would be for a benefit pool of $100,000, drawing down $3,000 monthly. This would start after 90 days, and this is showing you your premiums. The premiums are per age, so we're just showing it in 5-year bands, but the premium is designed to not increase for life. So if I'm 47, I would be somewhere in between that 45 and 50 age, so $42 to $49 a month. The only way the carrier, and I lock in that premium except for, and this is an important except for, all insurance carriers are able to petition the state, in our case the state of Pennsylvania, for relief meaning a rate increase, for a block of business. So it would not have anything to do with your particular situation, meaning what your health is, that you're in claim, anything like that. It would be a block of business, everything written between 2015 and 2023, looking at that block of business and convincing the state of Pennsylvania that there is need for some relief. So there is the potential that there could be a rate increase. At this point, there is no rate increase that's expected to happen in your lifetime, but that's the potential. Down below, there's a footnote that's very important. If you and your spouse, care partner, both apply and are approved, all these premiums are 30% lower. So if I'm 45, my wife's 45, that roughly would be an $84 to $85 a month expense, minus 30%. So both premiums would be 30% lower than what is shown here. Why purchase now? We believe coverage is affordable based on the benefit design. You're going to determine what your own situation is, what your benefit design is, and what you may be able to afford. Younger active lifestyles has the potential for more accidents and injuries. I'm seeing this all the time. Gives you the ability to balance the money you put into retirement plans with the cost of a long-term or extended care policy. Modern medicine is diagnosing diseases earlier and extending our lifespan. So every year you see, typically in the newspaper, on TV, you're seeing how much more life is extended. This is absolutely important. The insurance carriers all are tightening their underwriting. What that means is you may be eligible today, especially with simplified underwriting. You may not be eligible a year from now, 2 years from now, 5 years from now, when now's the time you want it, and we may not be able to get you the coverage. Premiums are based on three things: age, health, and health is the unknown, in plan design. You were never as young and as healthy as you are today. What would be your next step? We've given you information, physically given you information, or the HR department has it, to explain how to go online and schedule personal consultations with us. We're going to be in all of the schools. It's going to be available to you to meet one-on-one with one of our long-term care specialists. For somebody that does not want to meet with a specialist, has no questions, it's an online procedure. You will have been given the information on how to go online. So with that, I will thank you for your time. You've got my information there to contact me. Please contact me with any questions, concerns, comments. Thank you and have a good day.